Hello, everyone. Good morning to you all out there, and welcome to another promising session on the X Trend Speed Live. I'm so thrilled to be here with you this morning, and into this session, we are going to be delving into a detailed technical analysis of a handful of instruments. Focusing on a comprehensive price action perspective, and together we are going to be exploring the recent market movements and chart patterns to uncover valuable insights that could greatly influence our trading decision for the new week. And it's on this note I welcome you all once again, and let's confirm that we are on the same page here. So if you can see my screen and you can hear my voice clearly without distortion, why not give me a hi in the comment section so that I can confirm that we are on the same page. So I would like to see some comment, please. If you can see my screen, you can hear my voice, let me know right in the comment section. So I'm trying to load up my comment section to see if there are any chats. Okay, so let's see what we have here. Okay, I can see Valeric, I can see BKDMC, 454, okay, Nest57, good morning to you. 221, good morning to you. 23221, okay. Hey, Carrie, good morning. Thank you very much for that confirmation. I really appreciate that. Okay, so let's take this as a positive note to start the session. Okay, hold on a second, please. All right, so let's kickstart then. For those who are joining us for the first time, you are highly welcome. And what we simply do here is to analyze the financial market. So on Mondays like this, we normally pick up random pairs, random instruments, which we'll be monitoring through the course of the week. And this is a very good opportunity. If you have any instrument you want us to look at, be it a commodity, cryptocurrency, currency pair, or options, feel free to let me know in the comment section. Drop them in the comment section and I will incorporate it into our plans for the week. So with that being said, let's dive right into the business. And you know how we do it. The first thing we want to be doing is to keep tabs with the fundamentals. So we want to be checking the economic calendar to see what is really going on in the market. And in fact, in the last 12 hours or so, the US dollar has been holding its ground against major rivals in the market. So we are going to be looking at how we are going to be positioning ourselves while also reviewing how price action has been playing out in the last few hours. So the first high impact event coming in for this week is coming in about 2-3 hours from now, and that is the ISM Services PMI, which is coming from the US docket. So the ISM non-manufacturing index is released by the Institute for Supply Management, and it shows us the business condition in the US non-manufacturing sector. So this is a very high impact event, and a result above 50 is considered to be a positive signal for the US dollar, while anything below 50 is considered to be a negative signal. And from the previous data we have here, we have 51.9, that was the previous data, and we have a general consensus projecting a 51.5 for the month of May. So we are going to be looking forward to what the actual data is going to be like. Will it be just as projected, beyond projection, or even below projections? These are things that we are going to be looking at. And however, we will be obviously seeing our price majority in the market will be anticipating this event, which will of course reflect on the chart as price action. So with that being said here, and with the information we have gathered here, let's dive right into the chart. And the first commodity we are going to be taking this morning is going to be the US oil spot. And on the US oil spot, we want to scale up into the higher time frame. So the first thing we are going to be doing here is to look at things from an holistic point of view. And I was able to identify a simple setup here that I think we can use to guide our trading activity for this week. Now, if we look at the 4 hours time frame closely, what I did here was to take into consideration trading activities since the month of April. And if you do that correctly, you will see that price action has been bearish in this market. And to further emphasize the level of seller strength, we have a beautiful bearish trend line after connecting the series of lower highs, which obviously has been helping us to guide the bearish momentum in this market. However, in as much as we have been seeing lower highs, one thing that is significant about the structure is that since the beginning of last month, we saw how price action fell into a choppy situation, giving us an insight into the level of indecision in this market. As you can see, price action has been trapped within that range between the $74.50 level and the $67 area to give us an indecisive phase. Now, despite the fact that we have seen lower highs here, we are yet to see a lower low. And if we are going to be seeing a lower low, then definitely we want to see price action take out this demand zone, give us a lower low to incite a trend continuation to the downside. But in the last 1 month, we are yet to see that, and which also gives an insight into the potentials that buyers have in this market. Now, to help us guide our trading activity for this week, I was able to identify a key level at the $72 area, which we are going to be using. So we had the key level here, and if you look at the nature of that level, you will see how this zone, how this area has been serving as a major determinant of price action since the month of May. We saw how this area was broken to the downside. We saw how it became a demand zone here during the second week of the month of May. We saw it break down the structure at this point. We saw a retest selling pressure again at this area. We saw buy pressure again come in. You will see here again during the course of last week's, 2 weeks ago, we saw price action buy pressure around that area. And last week's trading session, we saw how price action broke down the structure significantly to the downside. And by the end of last week's trading session, we saw how price action came back into that $72 level. So you will agree with me that this area has been a strong determinant of price action since the beginning of last month. And prior to the beginning of this week, I was anticipating that if I see selling pressure below the $72 area, then we might likely be seeing a trend continuation to the downside. But if price action breaks above the $72 area, then at this point we would have seen price action break out of the bearish trend line which we identified earlier. So of course, when price action breaks out of the trend line, that this will be a sign that the trend line may no longer have the capacity to continue to negate the bullish momentum, the bearish to negate the bullish momentum in this market. So we already saw the breakout of the neckline here, and the breakout of the key level, the breakout of the bearish trend line, and in fact price action is back above this bullish trend line that we identified here. So for me at this point, as long as price action remains above that $72 level, we want to be looking out for buying opportunity. So what we are going to be doing at this point is to scale down into the 1 hour time frame so that we can see how participants in this market has been reacting to the structure. And one other thing I would like us to take note of is the fact that the Oplex Plus had a meeting during the weekend, Saturdays and Sunday. There was a meeting. I'm yet to have an highlight to that meeting, but I think by tomorrow I should be getting something and I will be sharing with you accordingly. So in the meeting, there is this general consensus that they are likely going to cut oil production, And of course, everyone in the market wants to see how the market will be reacting to the decision the OPEC Plus will be making. And as a result of that, we have seen this bullish gap that you see here. So the week started at around that $73.50 level. So we had a very strong bullish gap here, which is a sign that there was a voluminous trading activity during the course of the weekend, which favored a bullish momentum. So we want to see how the market has been reacting to that area after the breakout of the 72. To do that, we want to scale down into the 1 hour time frame at this point, and this was what I was able to spot on the 1 hour time frame. Now, at the beginning of the week, after following the bullish gap you saw here, we saw how price action has been caught within a range between the $73.40 level and the $72.50 area to emphasize the level of indecision in this market at this point. So with this kind of situation here, you know how we do it. Whenever we have a flat channel, we want to wait patiently for structures to mature and give us a signal, which will come either in the form of a breakout of the resistance line for buying opportunities or breakdown of the support line for selling opportunities. And with this situation here, we can see that we already had a breakout of the structure, which for me is a sign that we might likely be seeing price action climb to the upside. And in addition to this bullish expectation is this bullish trend line I was able to identify after connecting the series of higher lows since Thursday of last week. So we have a trend line here. So what this simply means is that as long as price action remains above this bullish trend line, we want to feel comfortable in our buy position and look out for more opportunities to buy. And now that we have a breakout of the $73.40 area, I want to be having a buy stop order above the $73.40 area to capture this trend continuation to the upside. And as you can see, price will still remain above that trend line, giving us more confidence to be in a buy position here. So what we are looking forward to here to buy the US oil spot is for price action to climb back above the $73.40 level. So that is that for buying the US oil spot for today. And if price action continues to the upside in such a way that it breaks out of this resistant line at the $74.50 level, then definitely we want to be adding more buy position to our existing trade. So that's how we are going to be buying the US oil spot for today. Now, in as much as we're looking out for buying opportunities, you know how we do it here. We always want to keep our options as open as possible. The financial market is a very fluid environment, and for us to be very profitable, we have to be on top of our game by being very flexible too as well. So in as much as we are looking out for buying opportunity here, we don't want to ignore the potentials that the sellers also have from this current structure. Now, what do we want to see on this chart that will make us to change our bias from bullish to bearish? Well, we already have a trend line, of course, which we identified earlier after connecting the series of higher lows. And one thing we are going to be looking out for is to price to break down this trend line to give us a sign that this trend line may no longer have the capacity to negate the bearish momentum anymore. And if it so happens that we sight a breakdown of the trend line, then we want to be getting ready to sell. So if we are going to be selling, remember, a breakdown of that trend line does not confirm us to sell right away. We are not having a sell stop order here, but instead wait for confirmations to happen. Remember that this is a very strong bullish momentum since the second half of last week. So we really want to see a confirmation happen before we want to be joining a bearish move. And to do that, we are going to be scaling down into our lower time frame once we sight the breakdown of the bearish trend line. And what we are going to be looking out for is a retest of the trend line, followed by selling pressure on our lower time frame to give us an idea that sellers are gradually gaining momentum, after which we want to join the structures, then have a sell stop order below the $72.50 level to join another wave of bearish momentum. And if it so happens that price action breaks down our key level at the $72 level, then we want to be adding more position to our existing trade. So that is how we are going to be selling the selling the US All Spot today. So we're only looking out for selling opportunities only if price action breaks down this bullish trend line. So it's quite a simple setup we have here on the US All Spot. So I hope that we mark this out on our chart, and if you want to, screenshot my screen so that you can use it as a reference point when you're about to make your independent decision on this commodity. So if you have any questions regarding what I just explained, feel free to let me know in the comment section, and trust me, I am willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions, after which there are none. We will be moving on to the next option. So let's see what we have here. Okay, I can see Arabai. I hope I pronounced that correctly. Hi, good morning to you. Thank you for saying hello. Thank you very much. Halihaz, good morning to you, Halihaz. How are you doing today? Trust you had a wonderful weekend. So in the absence of no questions, I want to assume that we're on the same page. So I will be moving on to the next option, which is going to be the USTech100. Aki88, good morning to you. Thank you very much for checking in on us. Good morning to you, Aki. Trust you had a good weekend. Okay, so on the USTech100, the first thing we want to do here is to have an holistic view of what is really going on in this market. And to do that, we are going to be looking at things from an holistic point of view. We want to see what the trend is looking like on the 4 hours time frame, and I was able to come up with a simple structure. And what I did here on the 4 hours time frame was to take into consideration what has been happening in this market in the last 1 month. So this is from the beginning of the month of May, I think the first week of the month of May, and it is quite obvious that price action has been bullish. And to further emphasize the strength of the buyers here, I was able to connect a series of higher highs and higher lows, giving us this beautiful, simple ascending channel, which has been guiding our bullish momentum in the last 6 to 7 weeks now. However, something interesting has been going on in this market in the last couple of weeks, so I want to zoom right into where our center of focus is. So we saw this first key level. I have a couple of key levels here. So the first one is the 14,250, which was broken and retested to incite another wave of bullish momentum. And the second key level here is the highest point price action has been this year, which is at the 14,600, which you can see here. And one thing about that 14,600 is the fact that it also shares a confluence with the resistant line of that ascending channel, which is something interesting. We are going to be looking at that in a moment. Then another thing I did here was to identify our key level for the week, which is the 14,500 area here, which also has been a major determinant of price action throughout the course of last week. We saw how this level was a strong selling niche at one point, negating the bullish attempt to break out of that structure, and not until Friday last week we saw the final breakout of that area. Now the next question we are going to be asking here is that, is this breakout we see here a true breakout or a false breakout? So if it's going to turn out to be a true breakout, then we want to continue to see higher highs, where price action will break out of the 14,600 to welcome more buying opportunities in this market. However, if price action drops back below the key level at this point, then we want to consider this a false breakout, where price action is likely going to come back to respect the support line of that ascending channel, probably to incite another wave of bullish momentum, or even break down the support line to incite a sell-off in this market. So this is how we are going to be looking at the market for this week. And in order to have a better idea of what is really going on here, remember we already have a key level at the 14,500, where we are going to be focusing on and see how participants in this market has been reacting to this level since the beginning of this week. And in order to do this, we are going to be scaling down into the 1 hour time frame. Now on the 1 hour time frame, after monitoring price action in the last 12 hours, this is what I was able to come up with. You will see that the week has started on a strong bearish momentum. This is where price action started this week around the 14,550 level, giving us a new resistant line to guide our trading activity for this week. So we have the 14,550. Then we saw our price action dropped into the key level at the 14,500, between the 14,500 and the 14,485 zone. So you can see as soon as price action got into that area, we begin to see some buy pressure resume, now giving us a flat channel to work with for this week, at least for the first half of this week. And you know how we do it whenever we have this kind of flat channel. We want to wait patiently for structures to mature, and what we are going to be looking out for is either a breakout of the resistant line of this channel to give us an opportunity to buy, or the breakdown of the support line of this channel to give us an opportunity to sell. And like what we identified on the 4 hours time frame, remember we saw how price action respected the resistant line of the ascending channel, and since price action tested the 14,600, we have been seeing strong selling pressure. If you consider the nature of this the nature of the week of this candle, you will see sharp rejection of this area, giving us a sign that sellers are gradually gaining momentum. And the week started on a very strong bearish note, as you saw here. Price action started around the 14,550, and the next attempt by the buyers to come close to that area was this point here, which we saw that price was unable to get close to that level, giving us something that looks like a shooting star candle, which is a sign that sellers are still present in this market. So you can see the shooting star candle here, giving us a sign that sellers are still present in this market. And now that also buttresses the likelihood that we could have a breakdown retest of the 14,500 to join a bearish move to the downside. So we are going to be looking out for selling opportunities at the breakdown retest of the 14,500. So if a breakdown happens, we want to scale down into our lower time frame, like the 15, 10 or 5 minutes time frame, to look out for retest of structure, after which we want to join that decline to the downside. So that is the only way we are going to be selling the USTech100 for today. Now, in as much as we're looking out for selling opportunities here, we cannot ignore the potentials that the buyers could also take advantage of any opportunity at this point. And considering the fact that we are on a very strong bullish momentum, it is quite reasonable that we consider what potentials the buyers have. So looking at the structure here, what are we going to see on this chart that will give us the confirmations that buyers are still very strong in this market? So since we already have higher lows here since last week, I want us to connect the series of higher lows, and to do that we have something like this, which we are going to be using to guide our trading activity for this week. So if we do this correctly, we have let's see, let me bring this up a little bit, then we will be doing some adjustment where we bring out our candle chart. And as you can see, and look at what has been going on here, see how buy pressure has been respecting this trend line, though we had a breakdown of the structure here last week Wednesday, but price action climbed back up on Thursday since the beginning of this month. And you see that since price action climbed out this trend line, we have seen how that trend line had continued to hold buy pressure in this market. The same thing has happened here in the last couple of hours. You see how the trend line continued to hold buy pressure. So if this continued to persist, that means that a breakout of the 14,550 will give us an opportunity to buy. So we could have a buy stop order above that structure, and then have a stop loss sitting somewhere below the trend line, so that we can capture any retracement. So anywhere around the key level, giving us about 45 to 50 pips stop loss on this one. So a breakout will trigger our buy position, and there is a chance that price action could come back, retest structure or the trend line to incite another wave. Then another opportunity to buy will be coming in if price action break out of the $14,600 area. So this is how we are going to be buying the USTech100 for today. So as long as price action remains above this bullish trend line, we'll feel comfortable in a buy position and look out for more opportunities to maximize the potential of this expected bullish momentum above the 14,550. So that is how we are going to be trading the USTech100. So we have a simple setup already marked out. We have a range which will be guiding our trading opportunities. A breakout of the resistance line welcomes buying opportunity, and the breakdown of the support line welcomes selling opportunities. And in addition to that is this trend line, which I said we should also mark out to use to guide our trading activity going forward. You might want to screenshot my screen so that you can use it as a reference point to make your independent decision. So if you have any questions regarding what I just explained, feel free to let me know in the comment section, and trust me, I am willing to be of help in that regard. So give me a moment please while I try to sort out my next chart. Okay. All right, so let's move on to the next pair that we are going to be looking at for today. And what's the next pair I have on our watch list? Let me look at this closely. Okay, so I think the next pair we are going to be looking at is the GBPUSD. So on the GBPUSD, we have been enjoying a very strong bearish momentum since last week's trading session, and we are going to be looking at how we've been profitable on this pair so far, and how we intend to position ourselves ahead of the new week. So here we are on the 4 hours time frame, and the first thing I was able to do here on the 4 hours time frame was to acknowledge the fact that price action has been bearish since the second week of the month of April. And to further emphasize that, I have a couple of trend lines here on your screen which you will see, which has been respected a couple of times. So I have the major one here, and then I have the second one here too as well, which is a temporary trend line on your screen, which has also been broken to the upside. Now, something interesting happened last week when we saw the accumulation phase around the 1.2330 level. We saw buy pressure as sellers were finding it, despite the fact that we had lower highs. We saw how it was difficult for sellers to break through this demand zone at the 1.233 zone. And because of the situation here, we anticipated a buy opportunity, and this led into the breakout of this bearish trend line, which happens to be the first time price action will be breaking out of that trend line in the last 5 to 6 weeks. And with the breakout of that structure, we were part of this bullish move as we rolled it all into the 1.2550 area. And following the NFP data on Friday, positive NFP data, we saw this old bullish traction from the dollar, and we rode the move all the way to the downside. So this is how this thing has been going in the last 1 week on this chart. Now, as we head into the new week here, I have a key level at the 1.2440 area, which is going to be our yardstick to guide trading activity. So you know how we use our key levels. If price action remains below the key level, we look out for selling opportunities, and if price action is above the key level, we want to be looking out for buying opportunity. And this was the reason why I sold the GBPUSD this morning after price action broke down the key level at the 1.2440 area. But at this point, we can see our price action is currently trading along this trend line that was established during the previous week. Remember, we had the bullish momentum, and right now price action is back along that trend line. Now we are at a critical point, if you ask me, where anything could happen from this current point. We could have buy pressure resume around that area to begin another wave of bullish momentum. That is one scenario we are going to be looking at. And one more thing about this structure is that let me do some if we look at this trend line here, you will see that it's a little bit close to the trend line, to this bullish trend line, where we could see a sharp rejection of that bearish trend line to incite a bullish momentum at this point to the upside. So it's still looking very bullish. We cannot ignore the potentials of the buyers at this juncture in the market, despite we have a sell momentum at the beginning of the week. So we want to be very careful here to see how price action will be reacting to this trend line on our 4 hours time frame to decide what our next line of action will be. So if we do have a breakdown of this trend line, then at this point we want to consider selling. But remember, we are not jumping into a sell position outrightly, as we want to wait for confirmations to happen, which might come in the form of a retest of the trend line before another wave of bearish momentum happens, or it could even go into the 1.2440 level, a level which is our key level for the week, to incite another wave of bearish momentum. So we are going to be taking this into consideration. So let's scale down into our lower time frame so that we can position ourselves appropriately ahead of the New York session. So right now we are back on the 1 hour time frame, and this is the trend line we identified earlier along on the 4 hours time frame. So I want us to acknowledge that level. So we have a key level around that area where it depends on how price action reacts to the structure that will determine what our next line of action will be. So we have it at the 1.23850. So I will mark this level out, label it for the sake of clarity. So we have the 1.23850 level, which we definitely is going to be guiding our trading activity going forward. So I would like to place this at the bottom right hand side. Beautiful. So we have something like that. And even if we go to as far back as last week, you will see how this level has been a major determinant of price action, making it an area that we want to focus on, remain patient, and see how price action reacts to the structure to determine what our next line of action will be. So if we start seeing buy pressure around this area, there is a chance that price action will be respecting that trend line we identified on the 4 hours time frame to incite another wave. So if we see a double bottom structure, we want to be part of a bullish momentum. And if we rather move to the upside, as soon as price action gets into the 1.24250 area, remember this is our support line for the week. We want to move all stop losses to secure the current buy position and wait to see how price action will be reacting to that level to determine if we are going to be adding more buy position or getting ready for another wave of bearish momentum. So a breakout will welcome more buy position in this market to the upside, and if continued selling pressure happen around this area, then we want to be looking out for selling opportunities to incite a trend continuation to the downside. So let's keep this in mind. Let's mark this out on our chart and look out for trading opportunities when the structures mature. However, if price action drops below the 1.23850, then at this point we want to be consider selling or adding more sell position if you have already been in a sell position on GBPUSD. So a breakdown of this structure will have also broken down the bullish trend line we identified on the 4 hours time frame, where a retest of structure on our lower time frame will further give us more opportunities to add more position to our existing trade. So this is how we are going to be trading the GBPUSD today. So we have key levels to mark out on our chart, and then depending on how price action reacts to this key level will now give us an idea of what to do during the New York session today. So screenshot my screen, mark these levels out on your chart, and let's see how price action will be playing out from this current structure going forward. If you have any questions, feel free to let me know in the comment section. I can see Moise 82. Good morning to you, Moise. How are you doing today? I'm glad to have you around. And you want us to treat the EURUSD? Okay, no problem. We are going to be including that. So stay tuned in and so that you don't miss out on that session. All right. So on that note, in the absence of no questions, I want to assume that we're on the same page. So I will be moving on to the next pair on our watch list for this week, which is the XAUUSD. I want to treat the XAUUSD first of all, after which we will treat the EURUSD introduced by Moise 82. So on the XAUUSD, we also had a very profitable position last week on the XAUUSD. Especially throughout last week, we had a buy position. Remember, we bought above the 1,940. We rode that move all into the 1,980. And following the NFP data last week Friday, we also rode this bearish momentum to the downside. So it was quite a very, very profitable trade for us on the XAUUSD last week. And congrats to everyone who has been part of this profitable journey on the XAUUSD. Now that we are heading into the new week, how do we intend to capture any potential trading opportunity here? Well, let's have an holistic perspective of what is really going on in this market. Now, if we look at what has been happening here since the month of May, that is the beginning of the month of May, you will see that price action has been bearish. It's very evident. We have lower highs here. And when we connect the series of lower highs, we have a simple bearish trend line which has been supporting and guiding our bearish momentum since the beginning of the month of May. Now, something interesting, just like what we have been seeing on the previous instrument we have been monitoring, despite the fact that we saw lower highs in this market, we yet to see a lower low. As you can see, as soon as price action got into that 1,940 a couple of weeks ago, we saw how buyers negated all attempt by the sellers to break down the structure. So as a result of this negation from buyers, we are yet to find a lower low that will confirm the strength of the sellers in this market. And as a result of this rejection around the 1,940, we have an indecision phase here where price action has been trapped within the 1,980 and the 1,940 since the second half of the month of May to give us an indecisive phase in this market. And in addition to the structure, I had a key level at the 1,955, which was supposed to be guiding my trading activity for this week. And what this simply means is that if price action remains below the 1,955, we want to sell, and if price action climbs above the 1,955, we want to be looking out for buying opportunity. Now, with the look of things right now, in the last 4 to 5 hours, you see that price action is back into the demand zone we identified last week at the 1,940. And since then, we have been noticing some sharp rejection of that level. And what this simply means is that we are back within the buyer's territory. And as long as price action remains above this demand zone, we would have no other choice than to look out for structures or patterns that will be supporting a bullish momentum. So when we scale down into a much more lower time frame, we want to see reversal patterns like double bottom structure, head and shoulder patterns around this area to give us a confirmation that we might likely be seeing a bullish momentum from that area. But if price action drops below the 1,940, then that will have taken out all the buy positions along the structure to give us an opportunity to sell. So if that happens, we want to wait for a retest of structure. Remember, we are not getting too excited. We are not having a sell stop order below this level. We want to see price action break down the level for the first time and then scale down to a much more lower time frame to look out for retest of that structure. We want to see signs that buyers are finding it difficult to climb back above the 1,940 before we want to be joining a bearish move. So with the information we have gathered here on the 4 hours time frame, we want to be scaling down into the 1 hour time frame where we begin to see things more clearly. So scaling down into the 1 hour time frame, this was what I was able to identify here at the beginning of this week. Now, the first thing you will observe here since the beginning of this week is that price action has been very bearish. A price action started at around the 1,950 level, as you can see here, with a strong bearish momentum, and in fact price action dropped all the way into the 1,944, giving us our first support line before it was broken to the downside to test the 1,940 area. And as you can see, we saw this on the 4 hours time frame. We saw buy pressure resume around this area, which is a sign that we might likely be seeing a reversal pattern that will incite a trend continuation to the upside. And in addition to this range we have here is a bearish trend line, which, as you can see, since Friday we saw our price action had consistently respected that trend line. So if it so happens, as long as price action remains below that trend line, we definitely want to be looking out for selling opportunities. But if we consider what has been happening around this area since the beginning, since the last 4 hours, looking at this buy pressure we have been noticing here, we might likely see a breakout of that trend line. And in fact, if price action breaks out of that trend line, this would likely trigger an opportunity to buy the XAUUSD. And mind you, a breakout of this trend line will be inciting a counter trend opportunity, where a retest of structure will further confirm that buyers are gradually gaining momentum. And one thing I would like us to take note here is that this is a counter trend opportunity, so we want to be on standby to move our stop losses as soon as price action moves significantly well in our favor. So we want to see how price action will be reacting to the structures, the 1,950, the 1,955, as this levels could incite a sell-off. So as soon as price action gets into the structure, we move our stop losses on the buy position to secure the buy position and wait out for more opportunities to join a bullish momentum at that point. So let's keep this in mind. A breakout of this trend line is more or less going to be seen as a reversal pattern unfolding. So we'll be on standby to be part of any potential to be part of any more opportunities above that structure, and move our stop losses accordingly to lock in profit when price action moves significantly in our favor. So on the XAUUSD for today, we are looking out for buying opportunity at the breakout retest of the $1,944 level 20-cent area. So anywhere above that structure seems most appropriate to buy that level. So buy the breakout, scale down to your lower time frame, look out for retest, then we join the trend continuation to the upside. So that is how we are going to be buying the XAUUSD today. Now, in as much as we're looking out for buying opportunity in this market, we cannot ignore the potentials of sellers. Remember, this has been a very strong bearish momentum since last week, and obviously it is quite reasonable that we consider the potentials that sellers could still take over this market. Now, what do we want to see on this chart that will inform us that we should be getting ready to sell? So with the situation we have here, hold on a second, please. So with the situation we have here, the only way we are going to be selling is to see price action continue to trade below the bearish trend line that we have here. So this bearish trend line will continue to guide our bearish momentum in this market. So as long as price remain below that structure, we want to feel comfortable in our sell position. However, since we have been noticing some buy pressure around the 1,940 in the last 4 hours, and for the fact that this level had been a major demand zone during the course of last week's trading session, we want to be careful of selling anywhere above the 1,940. So for us to sell here, we want to see price action break down the 1,940, give us a retest of structure. It could be a retest of the 1,940 or the retest of this trend line to give us an opportunity to be part of a bearish move to the downside. So we are only going to be selling from this current structure at the breakdown retest of the 1,940 level. So let's keep this in mind mark this out on your chart. As long as price action remains below the trend line, we look out for selling opportunities, and if a breakout of the trend line happens, then we look out for buying opportunities above the $1,944.20 level. So this is what we are going to be looking at for. It's a simple setup. Let's use this as a yardstick to guide our trading activity for today. So if you have any questions regarding what I just explained, feel free to let me know in the comment section. And while I move on to the next pair, so Mo is 8-2, are you still around? So let's treat the EURUSD quickly and let's see what is really going on in this market. So as usual, the first thing we are going to be doing here is to keep tabs with the higher time frame. We want to see things from a long-term perspective, which will give us an idea into what is really going on in this market. Now, if we look at the daily time frame here, it is quite obvious that since the last quarter of last year, price action has been bullish, and when we connect the series of higher lows, we have a beautiful trend line that you can see here. So we have a trend line marked out, and which confirms that price action has been bullish since October last year. That is one. Then secondly, we have a key level to work with around this area, and that falls exactly around the 1.06900 level. So let's mark that out. I always like my key level to be in gold, so I will be changing this to a gold color, and let's label it 1.06900 level, right? So we have the 1.06900 level marked out, and that also should be in a gold color. All right, so we have a key level that will be guiding our trading activity for this week, and you know how our key level does help us. As long as price remain above our key level, we look out for buying opportunities, and if price action remains below our key level, we want to be looking out for selling opportunities. And if you look at this key level here, since the beginning of this year, you will see how this level had been a major determinant of price action. Look at what happened here in December. It was a strong selling niche. At the later part of December, it was a selling niche, and before we saw the breakout of the structure at the beginning of this year, we saw it break down again. It was a selling niche here as well, selling niche here before another breakout happened in the month of March. And right now price is back into that area, and since last week's trading session, we have been noticing how buyers have come back into this area to negate all attempt by the sellers to break out of that structure. So we are within a very strong buyer's territory at this point, and we want to be scaling down into the lower time frame to see how price action has been reacting to this key level since the beginning of today. So when we scale down into the 1 hour time frame, this is what we have here. So I will readjust this key level not to make it too big. So we have it right here. Okay. And look at what has been happening here since the beginning of this week. So we have this. I like to make it a little bit more concise. So let's see how I can bring it closer to our structures. I don't want it to be far away from our structure so that we can. Okay, I think it's better like this. So we have a key level that will be guiding our trading activity for today on the EURUSD. So if price action drops below the key level, retest the structure on our lower time frame, continued selling pressure below this area, we look out for selling opportunities on the EURUSD. However, if the buy pressure here continues as it has always been since the beginning of this week, as you can see here, continue buy pressure around that area, then definitely we want to be looking out for buying opportunity. Now, how do we intend to join this bullish move at that point? Well, if you look at the structure closely, bringing out the line chart, we have a specific point of connection. So we have an area here around the 1.0704. Is it 50? Should I put it at 50? Because of the psychological level there. So let's look at this. We'll bring back our candle chart to see things clearly. So let me label it first of all. So we have the 1.07050 level. That will also be in blue. So I'll place it at the top right hand side of our screen and then bring back our candle chart. Beautiful. So we have a structure to play with right now. So if price action breaks out, retest the 1.07050 level, then we are going to be seeing this as a confirmed reversal pattern to join the bullish momentum to the upside there. But if price action drops below our key level at the 1.0690 area, then we want to be looking out for selling opportunities at that point. So let's label this area sell the breakdown retest of this structure. Now, in addition to this simple flag channel we have here, I want us to acknowledge the fact that since the midweek of last week, price action has been finding higher lows, and I want to connect that to give us a trend line to work with for this week. So I have a trend line already marked out here. Let's see. Okay, I'll give this a green color. All right, so we have a candle chart here back. So we saw the higher low here. We saw a false breakdown of the trend line. We saw price action climb back above that trend line, and it has been respecting that trend line ever since. Price is back into that trend line, and we continue to see buy pressure, which is a sign that we might likely see a situation where the trend line is respected one more time to incite another wave of bullish momentum. So let's be on standby above the 1.07050 level. So we have a buy stop order above the structure to be part of a trend continuation to the upside. And like I said again, let me repeat this. If price action breaks down the 1.0690 level, which happens to be our key level, price action would have broken down the trend line. And one thing I said here is that we are going to wait for price action to give us a confirmation. And to do that, we scale down into our lower time frame. Look out for either a retest of the key level or this trend line with continued selling pressure below the structures to give us an opportunity to sell. So our center of focus is between the 1.0690 level and the 1.07050 area, which we are going to be using to guide our trading activity for today. So mark this out on your chart, and definitely we are going to be using this to guide our trading activities going forward. So that is that on the Euro USD. I hope Moise 82 is still around. If you are around, let me know in the comment section. If you have any questions whatsoever, feel free to let me know in the comment section. So far so good. We have treated how many pairs now? 1, 2, 3, 4, and 5, right? We treated the GBPUSD, and we also treated the XAUUSD and the EURUSD. And I think I'm already out of time. Can we still treat the USD JPY? Because of time, I just hold on and let's call it a day here. So it has been a wonderful moment with you guys this morning. I really appreciate every single moment I had with you guys. And what we are going to be doing, I would like to say here that we want to be very patient here. Today is Monday, and most of the times Monday trading activity is always very slow, and this can incite a compulsive trading decision, which we don't want to let creep into our repertoire. So to avoid that, we want to have our chart marked out. We want to wait patiently for our structures to mature before we want to be jumping into any position. And I am very confident that we are ready, as we were able to simulate all the potential trading opportunities that could likely come in from all the instruments that we are monitoring so far this week. So let's be on standby to catch any of these opportunities as we continue to monitor price action. So I wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instruments that we have been monitoring so far has been doing. Do have a wonderful evening, everyone. Bye-bye.